Oh my goodness.
Hey, good evening. What's up, y'all? Thank you for joining me again on this lovely Sunday. I got something special for y'all today. We're going to jump right into it, and we're talking about business funding. So, whether you're watching this live or you're watching this on the replay, I want you to let me know how you feeling in the comments. Let me know you can hear me. Let me know we're good. And then we're going to jump right into the topic of discussion today. So as you can see, as always, you know how we do it. Even if you're new, this is, if you look to my left or your right, whichever way you're looking, we got four main topics. Okay. And all of these topics have to do with business funding. Okay. So first, we're going to go through business credit inquiries, whether or not they're important. Do they matter in business credit? Do they impact you? I'm going to answer that question. Then we're going to jump into banking relationships. Do they matter? How do you build banking relationships? Is it even important? Then we're going to jump into number three, which is the truth about funding. I'm not going to hold any punches. I'm going to give you the truth about business funding coming from somebody who has worked in the banking industry, which is myself. And then last but not least, what you all, I'm sure, are excited to learn about, which is the fastest way to 100K. All right. So let's go ahead and get started. So listen, guys, when it comes to business credit inquiries, I posted a poll in my community. If you're not familiar, YouTube, I think you can actually do it on a computer now, but whether you're on a computer or you're on a mobile device, for whoever you're subscribed to, there's a community tab. And in the community tab, I've been, giving you guys a daily poll or a daily quiz, right? Sometimes the quiz questions are related to business credit, sometimes it's related to real estate, sometimes it's related to personal credit, whatever the case may be. On this channel, we're all about financial wellness, real estate, and mindset therapy. So every day I'm giving you guys a quiz, just kind of helping you learn by taking these quizzes, because whether you get it right or wrong, I'm going to give you an explanation to the true answer. So just a few days ago, I asked the question, business credit inquiries, do they matter? Right. And the answer is yes. Okay. Business credit inquiries do matter. Okay. Now, I'm going to be honest. When I first started learning about business credit, even when I first started making YouTube videos about business credit, as I was going through and I got excited and I was actually, getting approvals and starting to rack up credit cards and things like that, I too thought that business credit inquiries didn't really matter. And the reason why it actually does matter, or matter of fact, let me take a step back. The reason why I originally thought it didn't matter is because on Dun and Bradstreet, they don't really impact your scores. But remember, we talked about just 2 weeks ago the truth about Dun and Bradstreet, and I broke down a little bit about how your Dun and Bradstreet credit score works, your paydebt score. So I also talked about how Dun& Bradstreet is no longer the most important credit score. It's your IntelliScore, which is your Experian, and your FICO SBSS. So guess what? Your FICO SBSS score, remember I told you the FICO and then this small business scoring system, right? That's your most important credit score, and that's the one that is impacted by your increase, your business increase. So yes, it's very important. And I got a treat for you. I'm going to actually show you this special website. And I'll probably go ahead and drop the link in the description if you're rewatching this. And if you're watching this live, just come back later once we're done, and I'll come back and add the link. But let me show you what it does when you actually start racking up business credit inquiries. And remember, last time we had a live, I told you guys to make sure when you do apply for business credit or corporate credit, you need to have a strategy, and you need to make sure that you qualify or at least meet the minimum qualifications before you apply. Don't jump the gun. That way you can avoid unnecessary inquiries or unnecessary denials. Like that's really the biggest thing, right? You want to avoid unnecessary denials. So if you look right here, okay, now this is on the business credit website for Experian. And this is actually a business credit score planner where you can literally excuse me, I can't talk today because I'm live. No editing, right? So when you go to this website, and I'm going to drop the link for it, you can actually play around with the numbers and it'll tell you if you have a similar, business credit profile like this, what would happen if you got new inquiries, if a new collection account showed up, if you had a late payment show up, right? If you added more trade lines, or in the business credit world, we call them trade references or trade accounts, right? So this person right here, I've already, went in and plugged in this because this is kind of like a really good example. So let's say your business has been in business for 3 to 5 years and you have no increase within the last 9 months because with your business credit score with Experian, they only track the last 9 months. So let's say you have none. You have no collection accounts. Everything is good. You've never missed a payment and you have 3 or more open lines of business credit. And guess what? Your credit card usage is also low. It's under 9%, under 10% technically. So you would have a really great Experian and Telescore, an 85, for example. But let's say you get one new inquiry that shows up. Now, let me go ahead and show you right here. Well, it's just telling me to select, but I'm gonna go ahead and tell you what business credit increase are as it pertains to Experian. If you apply for any type of line of credit or revolving account, it can be a charge card, a corporate card, or a business credit card. If you apply for a any type of trade account where they're going to invoice you, yes, that does include net 30s. And some net 30s don't, but the ones that require you to have prerequisites, like they require you to have an 80 or they require you to have a couple of vendor accounts already, those will give you an inquiry. And then of course, anytime you apply for a like commercial real estate, if you're applying for an Airbnb or any type of property for a lease, you're going to get an inquiry. And anytime you apply for a loan or any type of funding for your business or through your business, you're going to get an inquiry. So let's play around with this. Let's say we add one inquiry. Boom, you dropped 6 points down to 79. Now you go ahead and add another inquiry. Boom. Uh-oh. Let me go back. Give me a second. All right. So let's say you add another inquiry. Boom. Now you're down to 74. Remember, we started at 85. We're down to 74. I want you to notice something. Notice how we were low risk and now we're already down to a medium low risk. So let's say you have 4 or more inquiries in a 9-month period. Your score can go all the way down to a 61. Okay. Now, I don't want you to look at this number and think that's really bad and you're not going to get approved for anything, because I want to teach you something as well right here. Remember, I teach you guys all the time on my YouTube channel. And especially if you attended my webinar or if you're a student of mine with GreenScale Academy, you already know where I'm going with this. So right here, you notice we're still in the green. We're still in the green, even though we're medium to low. We're not really low, which is where you want to be, but you're still in the green. So that's the most important thing when it comes to your business credit and telescore, which is your experience score, is that you stay in the green. You don't want to become a moderate risk or a moderately high risk or in the red, which was a flat out high risk, because nobody's going to lend to you if you're in the orange. Really, anytime you're in the orange or red, nobody's going to lend to you, and it's going to be really hard to get funding if you're in the yellow. So I wanted to point that out. Now, obviously, the biggest thing is going to be payment history. So if you got a late payment, your boat is gonna sink, faster than you can blink, right? Anytime you have late payments, that's an immediate red flag. Same thing goes for, let's say you got, on time payments, but you end up having high credit card usage. Boom, you're down to 44%. If you're over 90, you're down to a 42 IntelliScore. So that's why I told you in the last meeting that we did, the last live stream, I tried to focus on, listen, the way your credit cards are reported on Experian is completely different than how it's reported with Dun and Bradstreet. I just wanted to show you guys that really, really quick. All right. Now, with that being said, that's number one. Okay. So now that I've taught you how to, or the fact that and why business credit increase matter, and I forgot to put the scroll, but that's essentially why business credit scores and increase matter. I want to teach you guys now how you're going to really get your first business loan or your first business funding in general. And that's through banking relationships. How many of you know about banking relationships? Just go ahead and drop in the comment. If you've ever walked into your bank and looked the banker in the eye, right, wherever you have your business checking account, and you've gotten to know people that are in your local bank. It doesn't matter if it's Wells Fargo, Bank of America. It could be a big name bank, or it can be a mom and pop, type of small credit union. All right. If you have a business checking account and you've never walked into the bank, that's a problem. Okay. Business banking relationships, and this is the same thing in person, but even more so on the business side. Banking relationships is going to be key to allowing you to go in there and apply and actually get funding for your business. Because let me tell you something, that credit union that you drive past every day on your commute to work or on the way to pick your kids up from school, that just completely ignore because it's a coastal credit union or some random, North Carolina State Employees Credit Union or something like that. Those are the banks that are going to be more likely to work with you, especially if you're a new business. Okay, so you want to make sure that you don't neglect them no matter what bank you're with. And that matter of fact, that takes me to another point. Stop banking with these fintech companies, Blue Vine, heck, even PayPal. All right. Now, don't get me wrong, they do have one or two business products, but a lot of times those fintech companies report to your personal credit report. If you get a business credit card with PayPal, right? Let's say you use PayPal for your business and you got a business PayPal account and you are frequently getting paid and sending invoices. I'm pretty sure you've been invited to apply for a business line of credit or a business loan through them. Well, I'm going to be the first one to tell you, or maybe not, maybe the second or third. But if you were to get a business credit card through Blue Vine or not Bank of America, but PayPal, it's going to show up in your personal credit report, which kind of defeats the purpose. It's just like a Capital One Spark card. So, you want to instead focus on having a legitimate business banking relationship with a real bank, right? A hard bank. And then you can go in there, you can let them know, because it's nothing like sitting down with a personal banker or business banker or even a bank manager and telling them about your business plan, because when they see your vision and if they believe in you, they're going to be a lot more likely to work with you and give you like maybe a micro loan, which is $50,000 or under, in comparison to you just going online and applying for funding. Okay. So I want you to really focus on banking relationships. Now, how can you build a banking relationship? Well, if let's say you're banking with Bank of America, and you've had a business checking account with them, why not also open a business savings account with them? Especially if you're an LLC, you need to put aside 15.3% taxes anyway for your taxes every month. Why not go ahead and transfer that from your business checking to your business savings? Right now, you got two accounts with that bank, and that's going to help improve your bank rating. All right. I want you to start thinking, different in terms of how you view your bank. And then another thing. So if you got a bank account, a business banking account with them, whether it be checking or savings, why are you worried about getting an American Express Platinum or a Chase Ink or whatever, all these other flashy business credit cards? Why don't you get your first business credit card through your home bank? Okay. The more accounts you have with them, the more established you are with them. And especially if you're managing the money well and you show them that you can pay on time and they can rely on you, you're going to be, again, one of their favorite, businesses to work with, and they believe in you because they see your potential. Okay. So guess who else is going to be the first one to give you a loan, or could be, right? Especially with them seeing that you do have cash flow and they're the ones holding your account. So they see, right? They see. So I want you to also focus on banking relationships. All right. Now let me know in the comments, if you agree based on your experience. And if you haven't, and if you've neglected your personal bank, it's okay. Let me know in the comments as well. Don't feel bad. Now you know. I'm about to take you guys to school. Are you ready to learn about business funding and the truth about funding? Okay. So the first thing I want to let you know is there are different factors. All right. There's no one factor that's going to get you approved for a business loan. All right. There's actually 5 factors. And before you apply for any type of business funding, I don't care if it's a business credit card, a business loan, micro or larger than 50K, or a line of credit. I want you to really learn what I'm about to teach you right now. And that is the 5 factors of approval when it comes to business funding. Okay. So let me show you real quick what I'm talking about. And I'm going to break down each of the 5 factors. All right. So let me go ahead and make this big so you guys can see it. And then we'll jump right into it. All right. So the 5 factors of approval when it comes to business funding, right? Well, all funding, but I'll just say business funding. So the number one thing I want you to know about is these 5 factors. You got age of business. Okay. You got credit worthiness. You got cash flow. You have the industry, and you have the purpose. Okay. Now, if you're not sure what I mean by purpose or cash flow industry, let's jump right into it. And this is everything I'm teaching right now. This is straight from my course, which, if you want to know what it is, it's called GreenScale Academy. But let's jump right into it. So, from my experience, there are 5 main factors of approval when applying for business funding. Now, the first one is age of business. It's kind of self explanatory, but this is a very important factor of business financing that cannot be ignored. You just can't, right? Now, the best way I can teach you is just to kind of give you an idea based on the type of business funding. And remember, this is going to be depending on the type of financing your business is applying for. And this is going to be the average requirement for time in business, again, without a PG. Okay. So, business credit cards, honestly, you can get approved for a business credit card on day one, right? You can be a brand spanking new business and you can get a business credit card because remember, I taught you the difference between corporate cards and business cards. With business cards, is actually a PG guarantee every time. And that's why you can get it on day one of business because they're going to be checking your personal credit scores to give you that approval. Now, let's talk about accounts receivable financing. These are a special type of business loan where it's going to be based on your actual cash flow and how good you're doing in business, fiscally. Like, are you making money? Are you profitable? It's a minimum 3 months in business because most banks are going to ask for your last 3 business statements. Okay. So all you need to do is be in business for 3 months. Then we have equipment financing. So, because equipment financing has to do with expanding your business and scaling your business, they want to see that you've been in business for at least 6 months most of the time, especially alternative funders or alternative lenders. Then we have a business line of credit, which is my favorite, and we're going to talk about this later. Most banks want you to be with them, right? Remember, we talked about banking relationships with them for at least 6 months, and then you qualify for that business line of credit. Then we have term loans, which most of the time, especially when we'll talk about the SBA, which is next, they want you to be in business for 1 to 2 years. And then with SBA loans, they want you to be in business most of the time, a minimum of 2 years. All right. Now, that's the first factor of approval when it comes to business funding. That's just the truth. It is what it is. Now, let's talk about credit worthiness. Okay. Now, this is one of the most important, as you guys know, because it will either make or break your business's financial potential. Now, you must have both an excellent FICO score and a solid foundation of business credit to get six-figure loans. Now, without it, you'll never make it to the big playground of raising capital. Now, let's talk about cash flow. We've talked about it a little bit, but cash flow, I always say, will either become your magic carpet or a swelling black eye that can ultimately block your vision from becoming a reality. Okay. Now, a good tip is to also keep a healthy cash flow, right? A healthy cash reserve. Because let's say you are making consistently $10,000 a month and you got $10,000 a month coming into your bank account, right? Well, if you're making $10,000 a month, but at the end of the month, you only got $500 left over, that's not healthy cash reserve. You want the more money you have sitting in your account left over, the better your bank rating will be, the better your cash flow will look to lenders and even business partners, and the more likely they will be to lend money to you. Okay, so you want to make sure because remember the last 3 months is what they're going to look at. Okay, so try to keep a healthy cash reserve. That's really, 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 really important. And if you are employed, right? If you have a job, but you also have a business, you have a leg up because even if your business is not really making money, you can start depositing money into your business checking account from your personal checking account. And that's essentially you investing in your business and you are funding your own business, but at least shows that you have money coming in. Okay. Now, the third thing is going to be industry. This is also a big one. And it can be, a gift or a curse. So there are certain industries that we all know are considered bad industries to be in because they are controversial. So whether it be, adult film, adult entertainment, weapon sales and nightclubs, these are very high risk, but there are other industries that are still considered popular, yet some lenders and some banks will still deem them as high risk, and that's honestly because they just don't have enough experience with these type of companies. So whether it be alcohol sales, construction, wholesale, and different types of real estate, cannabis, which is a brand new industry technically, travel agencies, agricultural, e-commerce, media and podcast types of LLCs and businesses, right? And even legal services. So these are kind of like a list of what I would call preferred industry types. Now, don't get me wrong, if you are not on this list or your industry type is not on this list, it's okay. There are lenders out there for everybody. So don't think if you aren't on this list that you won't be able to get funding. All right? Because look, for example, here's an expanded portfolio. And again, if you don't see your industry type on either of these lists, all you got to do is just work a little harder to find lenders that work with your company. So maybe if you are in an unpopular or an uncommon industry, you should be doing research on, okay, what lenders work with my type of business or my industry. Then you'll be able to just deal with them, right? But I do want to tell you that industries matter. Next, let's talk about purpose. Okay. Now, purpose can mean many things. It could be, what the money will be used for, whether it be like debt consolidation, working capital to scale your business, or equipment financing to expand your fleet. Each financing option can come with different qualifications for approval, right? And you can apply for an expansion loan without being able to detail a brief business plan for scaling your business, right? But also, that's one way you can look at purpose. But also, purpose could mean something much deeper. Okay, it could be the very thing that's driving you to do what you're doing or the problem that your business solves. So remember, we talked about sitting down with the banker and telling them about your business because they're going to ask you, okay, or being able to market effectively to always show what your purpose is, right? That will help you in terms of getting funded. Okay, so the first step to creating long-term partnerships is selling the dream and getting investors to buy into your message. Okay, because raising capital has like you can apply for business funding, but raising capital is more about selling you, selling yourself, and selling your purpose and your mission. So that's why purpose is going to be the number one, or not number one, but one of the top 5 factors of approval. Because think about it. If you go up to a bank and you ask them for an expansion loan or a loan to scale your business, and then they ask you, okay, well, how do you plan to use this money to expand your business, expand your fleet, scale your business? If you can't then tell them how you plan on doing so, and you have no action items or no plans at all, no business plan to show how you're going to use the money, the chances are you could be denied right on the spot. So it's really important to have that purpose and know exactly, what you are going to, or how you're going to use said money that you may get approved for. Okay. Now that's really, really important. All right. Now, real quick, let me just pull up some questions before we get into the last one, or even some statements, because I'm just being able to look at it because I was showing you guys my screen. But to answer this question, yes, all right. There's definitely a benefit of having a business that's been open for over a decade. So remember, I'm sure you've probably heard this a million times before, but most businesses fail within the first 1 to 2 years. So if you have a business with longevity, you are absolutely at an advantage, and more lenders are going to be willing to work with you. It's the whole reason why some people prefer to look at purchasing maybe a shelf corporation in the real estate industry. Even though you have to start all over with business credit, you still get that age. So yes, you having a business that's over 10 years, if you're talking about yours, you would definitely be at an advantage. Okay. Um, and so Elmo says, if you write a goodwill letter to your personal credit card to see if they'll remove a couple of late payments from a year ago, and they say no, would your credit score go down? Um, so let me just, I mean, this is kind of unrelated, but let me just answer your question. If you were to send a goodwill letter and it works and they remove a couple of late payments, then your credit score is going to go up, right? But if they say no, like that doesn't affect you at all. That's like a one-on-one conversation. That's no different than you going to your bank and asking the bank manager to remove late payments and he says no. Like, that's just a conversation that has nothing to do with an actual like dispute. So no, that wouldn't impact your credit score at all. And then question about restaurants. Yeah, restaurants are actually good. Obviously there's a lot of restaurants all across the country that do well. And restaurants are scalable. So not all banks, but most banks have experience dealing with restaurants because it's a very common business. And that's great. Let me make sure I didn't miss any other questions before I move forward. All right, it looks like we are good. And if I missed your comment or question, please drop it again. Okay, now let's talk about the fastest way to 100K. I'm gonna be honest with you guys. Some of you may not like this, but I'm just being honest. In my opinion, this is the fastest way to 100K. It's not the only option, but business lines of credit in my opinion, are the fastest way to 100K. Let me explain something real quick. What most of these alternative funding platforms don't tell you, or what these quote unquote gurus won't tell you, is that most of these banks, especially alternative funding banks, all they do is stack credit cards. You think you're applying for, let's say, 100,000, but they're betting on the fact that you have either excellent personal credit or you have excellent revenue or sales that you can show proof of, and then maybe they'll get you, a $30,000 credit card here, a $40,000 credit card there, and another $30,000 credit card. That's how they're trying to get you up to that 100K, right? Because if you just do simple math, they're hoping that maybe in 3 to 4 credit cards that they could get you approved for, it'll add up to 100K. Now, does that work? Can you get $100,000 worth of funding that way? Yes, you absolutely can. But you know what you're also doing that way is you're stacking up credit increase. Okay. So instead of trying to get $100,000 through, 4 and 5 or 3 and 4 credit cards, why not work on those 5 factors that I mentioned? And then this next thing I'm about to mention, and just shoot for a business line of credit, because with a business line of credit, you can get approved for anywhere from $10,000 to $100,000. And then in some cases, some banks could give you more than 100,000, not just right out the gate starting out. But you see, the way it works is, let's say you go and you apply for a business line of credit through your home bank, which is why I talked about banking relationships from the beginning. You could go and let's say you get approved for a $35,000 line of credit through your home bank. Well, after a few months, if let's say you borrow 10,000 and you pay it back, pretty fast, or in a couple of payments, and you never miss the payment, they're going to raise your limit. They're going to give you more money. It's just like a credit card. When you get a credit card and they see that you're using it, you're actually using the capital that they gave you, and you're paying it back on time, and you're constantly spending. That's the almost a surefire way to get your credit limit automatically increased. That's how credit cards work. If you get a credit card and you just sit on it and you don't use it, you're not going to get a credit limit increase. I can promise you. Even if, let's say, you use it a few times per, like 1 or 2 times per month, you're only spending a little bit, and then you pay the full amount back. That's going to be excellent in terms of building credit, but it's not going to increase your limit. Now, only spend more if you can afford to do so, because the last thing you want to do is max out your car and then not pay it back. But the way business credit works in terms of getting a business line of credit, if you get a business line of credit of 35,000, and let's say you use 10,000 or 15,000, and then over the course of 4 or 5 months, let's say you pay it back, because, like, for example, let's say you do Airbnb and you use $10,000 to furnish a property, an investment property that you just secured, and then your break-even period is in 3.5 months. So in 3 or 4 months, you pay back the 15,000 or 10,000, however much you borrow, and you pay it back. Now the bank is like, okay, Kelvin actually borrowed 15,000. He paid it back. He never missed a payment, and each of these payments were actually on early. Let's extend his credit limit from 35,000 to, let's say, 70,000, and then another couple of months, now you got 150,000, and then another, so that's how business lines of credit can end up being your one-way ticket, your golden ticket to building capital with your bank. And remember, the more accounts you have with your home bank, the better your relationship gets. So guess what? If your business is doing well financially, and they can see steady sales come in, and they see that your actual business credit profile is good, your FICO SBS score is great, which is, let's say, over a 150, because you have good Experian business credit and you got a good Experian personal credit, which gives you a good business FICO score, the SPSS score. When you come back to them and you ask for a loan, a business loan of over $100,000, they're going to be more likely to do that. But yes, just like this person said, it absolutely takes time. I'm not saying building banking relationships is a quick thing, but it is going to be a surefire way to get your first 100K. Now, like this person said, Babyface Nelson, he's saying, um, building a banking relationship takes time, and time a lot of folks don't have starting out. Why not start? Why not stack credit cards first? So, I mean, maybe you came in towards like the end of what I was saying, but I start out by saying most of these alternative funding banking accounts or alternative lenders, they want you to stack credit cards. You can do so, but let's say, and I'm so glad you said this, because let me tell you the reality of it. And this is why I called it the truth about business funding. The reality is, if you have just good credit and not excellent credit, let's say you have a 680. When you apply for that first business credit card, remember, every credit card you apply for is gonna be a PG, because it's a business credit card, not a corporate credit card. So you're gonna get increase. So when you get an increase, obviously it hurts your score. So by the time you apply for that next credit card, your score is not the same, it's lower. It could be anywhere from 20 points to 40 points lower, or it could be a few points lower. So what happens if you apply for the first card and this happens too often, and you apply and cool, you got 20,000 on the first card. Then you apply for the next card and you get denied. Then you apply for the next card and you get denied. And so this is what I try to teach people. Unless you have excellent personal credit and you have no increase, let's say within the last 6 months, maybe even longer, that's the only time I really recommend for people to use credit card stacking. That's why, but I'm glad you asked the question. Now, if you're in the position and you have excellent personal credit, your scores are 750 or somewhere in that range, and you have no recent increase, yeah, you can use credit card stacking to get your first 100K. But I own a credit repair business, so I'm always going to be looking out for the people who have average credit. And so for the people who have average credit, a lot of the times it makes more sense to just apply for a business line of credit. That's going to get you half the way there, because a lot of the times you're going to get approved or on a higher limit on a business line of credit than you are on a business credit card. That's just the truth, of the matter. And then, of course, I'm not saying only wait until your business line of credit extends or gives you more money, but that's going to be basically like if you're running a 400, that's going to literally get you halfway across the track. All you got to do is run the other, half of the track, and you're there. You're across the finish line. So that's going to be the fastest way to 100K, is starting out by getting a business line of credit. But guess what? Let's say you start out with a business line of credit. You can then get one credit card or maybe two credit cards to get you across the finish line to that 100K. Or remember, you can get a micro loan. A micro loan is 50K or under. So with you already having a business line of credit that shows positive payment history, and you have a foundation of business credit, it's going to be a lot more likely or realistic that you can go and apply for a $50,000 business loan and get approved. You see, my friends, that's called what we call creative funding. You got to strategize. You got to come in with a strategy where you're trying to apply for things. And it all depends on what your main priority and main goal is. Now, let's say you're running an e-commerce store, so you want to focus on getting credit card capital because you're going to be churning credit cards, and you want to focus on getting those free reward points and free travels and all of that kind of stuff. Then yeah, it will make more sense, especially if you got good credit, to focus on just stacking credit cards, because that's going to benefit you more in the long run because you're getting all these free points. But if your sole focus is getting getting money and funding your business, now there's going to be a lot more ways that I can teach you to get funding. For example, in my course, which is again GreenScale Academy, you can learn a lot more about how to get funding. And there I talk about how you can raise capital through angel investors, through all different types of investors. I have a friend by the name of Mike, and if he was watching this, he would come on and tell you all about it. He was able to meet a guy in a parking lot. He was able to meet a guy in the parking lot, and that guy gave that investor, not guy, was literally wrote him a $10,000 check and invested in his business because he believed in his dream and his mission. So in my course, I teach you how to come up with your mission statement, how to give your elevator pitch, and how to what I call date investors, because you're going to have to date these people for a few months, talk to them for a few meetings, and really get them to understand your vision. And once you do, they write the check. That's what Shark Tank is all about. Shark Tank, when you watch Shark Tank, all of these investors, these venture capitalists, these VCs, they're looking to buy into you and your story. That's why they say, I'm out. When anytime somebody comes on Shark Tank and they realize that they still work a full-time job and they have a business and they don't want to invest. So it's no different. Okay. But yeah, grants, obviously any business owner up here, if you have never looked into getting a grant, if you never applied for a grant, you're doing yourself a disservice because that's free money. Yeah, it takes a little work, but we got AI and all these different chat GPT that can help you write a loan, right? So, well, not write a loan, but write a grant application. So you can go through, get free funding through grants. You can take advantage if your business is over 2 years. Take advantage of all that the SBA has to offer. Depending on what your industry is, but always know, guys, you need to make sure that you are focusing on building a relationship with these lenders that you already have open accounts with. So another question is 217 out of 300 a good business FICO score in regards to getting accepted for a business line of credit? Anything over 160 is considered a good business FICO score. So yes, that would be an excellent FICO score, actually. But you want to, business FICO scores go way above 300. It doesn't stop there. But so to tell you real quick, most of the time, um, SBA loans require you to have a 160 or above. Other lenders require you to have a 155. Most of the time, if your business, right, has, let's say, under 12 months of experience or a time in business, you're going to be in the 140s in terms of FICO SBSS. It's going to be rare that you get above 200, but if you're above 200, you're doing pretty good in terms of FICO SBSS. Yes, a lot of hard pulls, man. That's what I'm trying to tell you. Like, when you listen, I've I've worked with a lot of different funding platforms and things like that. And the truth of the matter is, yeah, when you start applying for, let's say you want 200K or 100K, that's going to be a bunch of credit card applications, and all of them are going to give you a hard pull. Okay, so some people try to teach you, oh, don't worry, yeah, you're gonna get you're gonna get a hard inquiry, but we'll dispute them off. But there's no guarantee they can dispute those off. So yeah, you gotta be smart when you go about applying for anything, guys. You need to be smart and come with a strategy. That's gonna be the best way to build capital for your business. Now, real quick, does anybody else have any questions before I jump off? And was I clear about what the fastest way to 100K is? Now, obviously, let me just tell you something real quick while I'm waiting for the questions to come in. Now, best case scenario, if your business is doing well, right? You are cash rich. You have, sales coming in, you're making over 20K a month, and you have good credit. I'm here to tell you, you can just go and apply for a business loan. And depending on, of course, how much money you're making, because it will be whenever you apply for a 6-figure loan, the number one factor is going to be how much money your business is making, right? Cash flow is going to be number one. Then behind that, personal credit. Behind that, business credit. Okay. So the reality of the situation is most new business owners, or most of you who are business owners that are watching this, right? You may be lacking in one of those three categories. You may be lacking in business capital or cash flow. So if you have low sales, you're going to need to lean on your personal credit and your business credit. If you haven't started building business credit and you have good personal credit, lean on your good personal credit to start stacking your first couple of business credit cards. And you also you also want to utilize corporate cards, because those are no PG, and you can get a corporate card of worth tens of thousands of dollars. Okay, like Capital on Tap is one of my favorite corporate cards. With Capital on Tap, you can get approved for like $30,000, and all they're gonna do is they want to see that your business is at least 6 months old and you have decent Experian personal credit scores. It's gonna do a soft pull, no hard pull, and you can get a corporate credit card with $30,000 as your first, limit. Of course, it'll be more or less based on your situation. But then let's say you have a good business credit, like you've established a good foundation for business credit using net 60 accounts like Moose Creek Traders, or other various net 60 and net 90 and net 30 accounts and others, right? Then you also have decent cash flow, but your personal credit sucks. You're gonna have to address the elephant in the room, as I say all the time, and improve your personal credit. And I'm not talking about wasting your money buying trade lines, authorized user trade lines. Those are a waste of money. Okay, those are a waste of money. You're talking to somebody who was a loan originator. Okay, so when I go in and I'm the person that checks your personal credit scores to see if you get approved for a mortgage loan, we can see that that's not your account. Okay, only primary trade lines are really going to help you get approved for any type of loan. And remember, these authorized user trade lines, all they do is boost your score. That's it. So what does it matter if your score went up 100 points if you still got too many late payments? The late payments are going to get you the denial. So you need to make sure that you take the time to improve your personal credit. All right. You need at least two of the three of those to really get business funding. Okay. Remember the three main ones. I talked about the five, but let's just be real. The three main ones are personal credit, business credit, and cash flow. Okay. No matter what time in business, if you're a new business or old business, there's funding out there for you. Purpose, you know, depending on where you're applying, sometimes you can get away with just choosing an option from a drop down box, and that's all they're going to ask you. Um, and then, yeah, so those are the only two that are, they are important, but, in industry, even if you're in the cannabis industry, there are alternative lenders out there that will lend to you. So the top three, if you don't remember anything else, is number one, business credit, personal credit, and your cash flow in no particular order. All right. Now, does anybody have any questions before we go? I would love to answer any of your questions, whether it be business credit related or business funding. All right. So, what business credit cards can I get approved for to get startup funds with no PG or a low credit score? So, remember, first thing I got to teach you is there's no such thing as no PG business credit cards. So business credit cards require a PG because they're extending a line of credit to you, the business owner. Okay. Now there are corporate cards that will give you an EIN only line of credit or card, and there's also charge cards, right, that are pretty much the same, EIN only. They may check your personal credit, but not give you a hard pull. But those were going to be automatic withdrawal type of payments, where you like a divvy, the divvy card. You can get approved for a divvy card with I can't say a low credit score, with a decent credit score. But there are, if you want to apply for a corporate card that's no PG, they can still get you approved. Honestly, it's going to be cards that will approve you based on your funding, based on your business checking account. They're going to ask you to link it, and then that's what they're going to approve you for. So let me show you real quick. Let me pull up my YouTube channel, and I'm going to show you what videos to watch, where I go into great detail about these two specific cards that will approve you based on not your personal credit scores, because they are corporate cards, but they will approve you based on your revenue and one other factor. Let me show my screen. I'm going to show you which ones to go check out. So where you want to go is, once you get to my channel, I'm going to show you real quick. You come down here. And matter of fact, let me show you the playlist. Well, I'll just show you, because you're on the home page. All you got to do is scroll down. You don't got to go far. So one is this. You see this video right here? It's the revenued business credit card. I called it a business credit card because, to be honest, that's just clickbait, because most of you call everything business credit cards, but this is called a corporate card. Okay. Now it says you can get $100,000 with this revenued based approval. And I'm going to go ahead and tell you real quick. They're going to have you link your business bank. They're going to do a quick scan to see your credit health, well, your cash flow health in general. And if you have good cash reserves and they can see steady funds flowing in, they'll give you an approval based on that alone. Okay. EIN only. So that's this right here. Okay. Now, another card that you can get with having quote unquote low scores is, I'm gonna go ahead and take you down to, it's called Torpego. Oh, I went too far. Yeah, Torpego. So you see this video right here. So this Torpego business credit card, aka corporate card, okay, this is a no PG card. Again, they're going to check your funds, okay. They're going to have you check, link your account, and then they're going to give you an approval based on that alone, okay. Now that's just proof. Again, guys, remember I told you there's three main factors. If you have if you have low credit scores and let's say low sales, it's going to be really difficult for you to get your first car. You're going to have to work on the two. You're going to either have to start depositing money, or work on at your actual business and making it more profitable so you can have more cash flow, or you're going to have to work on bringing that credit score up. One or two is going to have to happen, and in order for you to start getting cards in your business name. Yes, James, this will be available later. This is a live stream on YouTube, and so what happens is, once I end, the live chat will be available like within a day later, but the actual live stream, it'll live on my YouTube channel. Just go to my profile, go over the live videos, and you'll be able to watch it from the beginning if you missed anything. Okay, so Elmo says, you explained last time how to correct your business information on Experian. How about Equifax and TransUnion? Well, there's no TransUnion in terms of business with, I mean, unless you meant like not TransUnion, but Dun & Bradstreet, because yeah, there is no TransUnion business credit score. But with Equifax, I'm glad you asked. Let me give you the phone number. Let me first explain. So the way you update your Equifax business information is by calling this number that I'm about to give you right now. So go ahead, get your pen or pad or something out, and write this down. Matter of fact, I'll go ahead and put this in the chat. I don't know if you guys are going to be able to see it, but hopefully so. So Equifax Commercial Information Solutions, the number is 1-800 727 8495. Give them a call. And all you got to do is get to, once you get to the person who answers the phone, because they don't have sales reps, not really. The person who you speak to on the phone is going to be customer service, and just let them know you want to verify your business info. Now, I'm gonna be honest. They're gonna take you through, some hoops. You got to jump through some hoops to do it. It's not simple. I don't know why it's that way, but with Equifax, here's the process. So first, they're gonna say we got to send you a copy of your credit report. Then once you look at that credit report and identify what needs to change, then you call us back. Or they're going to send you this PDF via email, where you have to fill out this PDF, and it's like a change form, and you submit that change form to them. But here's the weird thing about Equifax. They won't even send you a credit report if you have no inquiries. So you would need to have an inquiry like within the last 12 months, a business credit inquiry with Equifax, and then they will send you a credit report via email within 48 hours. Typically takes one business day. Then they'll give you the ability to fill out this form and send it back to them all through email. Even if you talk to them on the phone and say, "Hey, I got my business credit report that you sent me. I need to update this information." All they're going to do is email you that document. You got to fill it out and send it back to them. So that's how you update your business credit report with Equifax. And again, there is no TransUnion. But with Dun and Bradstreet, all you got to do is go right down or right over to their website. And once you log in and view your business information, you can update it. It's pretty simple. So you're welcome. You're welcome, Bestia Productions. No, I don't. Well, I take that back. So GreenScale, my business, we do not, like, we're not a lender. We don't offer business lines of credit, but we partner with other lenders that do. So let me go ahead and take you to my website so I can show you how to navigate and check out what we have to offer. And then you can actually, if you see something that you qualify for, you can go ahead and apply without it impacting your credit scores. Because what we do is we have you fill out a survey first, and then you go from there. So let me go ahead and pull up my website so I can show you the different types of business lines of credit that we have available. So this is my website, which is GreenScale Credit. Some of you may not know, but I'm the owner of GreenScale Credit. Primarily, we do credit repair, but we have other services as well. So just come over to business funding here, or you can click business loans up there. So once you come here, okay, the first thing you'll notice is we have short-term business loans and we have long-term business loans. Okay, the short-term business loans, a lot of these are merchant cash advances. But once you scroll down below, you'll see we do have a business line of credit option. Now, the way I have my website set up is the same way I teach you guys whenever I'm showing you about different types of whether it be business funding products or even like net 30s and vendors. I tell you what the qualifications are. You need to know the data points. I don't make any video without telling you what the qualifications are, because to me that's pointless. So with a business line of credit, these are the qualifications. You got to have 1 year in business. You need to have $25,000 to show every single month in your bank account, or make at least $300,000 annual with a minimum 600 FICO score. Now, this is just one business line of credit program that I'm affiliated with through my company. Okay. Now, your bank, I'm going to be honest, most likely has a way better business line of credit option. The only difference is you see here, this company that I'm partnering with, they only ask that you have a 600 minimum FICO score, which is why they want you to have a lot more cash flow. Okay. But your local bank that I was telling you about earlier, is the opposite. They're not going to expect you to be making $25,000 or even want you to. What they care most about is that your FICO score is high and your FICO score is good. So let's say they're most likely going to be wanting you to have a 680 or better. And then most of the time, they want you to not carry any high balances on your credit cards. Okay, so yeah, on my website on GreenScale, we do have various funding products. Again, we aren't lenders. I created this site to basically connect you to lenders, alternative lenders that can get you funding. So, for example, with this one, it's National Business Capital, NBC. So, if you were to come here, fill out this survey, they'll give you a call. And I'm affiliated with them, through my company. So I have a good relationship with them. And essentially, my role through GreenScale Credit is to find people who do qualify for the funding. And so if you come to me and you're looking for funding because the big bank told you no, I can point you in the right direction, which in this case, for this specific product, is going to be NBC, National Business Capital. Okay. But remember, that's why, I wanted to make sure I told you guys from the jump, build relationships, okay? Because that's going to be always your best option. But if for whatever reason you don't meet those qualifications and the big banks tell you no, then you have to go and check out the competitors, really, which in this case will be alternative funding. Okay, so let's see if we got any other questions before I jump off. Okay, matter of fact, I don't want to skip anybody. Okay, so Rick Gaines said, what is considered a good Equifax score? That's actually a great question. A great question. So, in my opinion, right, first, I'm gonna tell you a unique way. Okay, a unique way to get you to a good Equifax score, and then I'm gonna tell you number wise what I consider to be a good Equifax score. So first and foremost, I would say you want to have a minimum of five trade accounts reporting to Equifax. Now, once you have a minimum of five reporting to Equifax, you'll have what I call a good Equifax score, because Equifax is one of the easiest, but at the same time, one of the hardest to build business credit with, because their score is primarily based on the number of accounts you have reporting. And that's why I wanted to tell you first, just aim to get five. But with that being said, over a 550. Okay. If you were to get over a 550, that's what I consider to be excellent, not good, but excellent, in terms of having an Equifax score. But at the same time, as long as you have a score of above 400, you're doing well. You're doing okay. Okay. If you have under 400, that means you need to add more trade lines. But once you get above 400, like, don't stress out about that score. It's going to improve with the more trade accounts that you get and the more payments that are reported. Okay. But yeah, 550 is what I consider to be excellent. But anything above 400, you're on the right track. You're doing good. What's the fastest way to increase my paydex score, business delinquency score, and IntelliScore? So those are three different, scores. As you know, paydex is extremely simple. It's the easiest thing you're going to do in business credit. The only way, well, let me ask you this, if you don't mind, Mr. Magnificent, do you have an idea what your paydex score is? The reason I'm asking this is, in order to get an 80, all you got to do is have at least, and I polled you on this the other day, if you're in my community on YouTube. But the fastest and easiest way to get an 80 is to have at least at least three payments across two different trade accounts. That'll give you an 80. You're at a 78. Okay, cool. So if you're at a 78, all you got to do is continue to make on-time payments. Add, let's say, a couple more trade accounts and start making your payments a little early, not too early, a little early. And then you should get up to an 80, at least an 80. Okay. So for example, let's say it's a net 30. My routine is paying net 30 accounts a week after it's due. I mean, a week after I make the purchase, make the order, or when the invoice is generated. Okay. Anytime you're in that 10 to day 30, anywhere from day 10 to day 30 is a great time to pay. The reason why I don't recommend paying within the first 10 days is because you actually could slip up and paying before the invoice is even generated. But yeah, that's all you got to do. It's all you really got to do. How do you dispute inquiries with business credit bureaus? Go back and watch the previous video, the previous live where I talked about business credit. And I said the truth about DMB there. I actually showed, if you didn't see it, I showed how to go in and do it. But essentially with Equifax, again, you're going to have to call them. The number I gave you earlier, which is 1-800-727-8495. Call them, speak to somebody. They're going to run you around the world, but they're going to send you a copy of your Equifax experience or Equifax business credit report. Then you got to fill out that form and send it back to them. With Experian, it's a lot easier. You just go to businesscreditfacts.com, go to update my report, and then you're going to update whatever needs to be updated. And at the same time, if there's nothing you need to update, then you're going to be able to dispute whatever you need to dispute. You can go down the list, check the checkbox of what type of item you're trying to dispute. Is it information, like your business information? Is it a late payment? Is it a tax lien? Is it a collection account? Whatever it is, you can dispute it. That's how you dispute it with them. And then the same thing with Dun & Bradstreet. You go to their website, go to update my info, my business info, pull up your business profile, and you can dispute there. Willar says, can you talk about ways to fund your business checking account? Can I legitimately fund my business checking account with my W-2 employer weekly payroll deposits? Is it considered pre-tax? Yes, you can do that. It's nothing wrong with it. And I'm going to tell you why. So when you start out a business, right, most of the time you're going to be funding your own business. So when you, let's say, Zelle money from your personal checking account to your business checking account, you're funding your business. If you go to the ATM, or if you go to the bank and you deposit cash, your own cash into your business checking account, you are funding your business. Okay. And the same thing goes with if you were to, let's say, go to your payroll from your W-2 and let's say you change it to where you want 30% of your W-2 paycheck to be deposited into your business and 70% to go to your personal, you are indeed what? You got it. You are funding your own business. So yeah, that's completely fine. It's completely normal. And it's honestly what most business owners do, before they can actually start qualifying for OPM, other people's money. All right. Well, thank you guys for joining me. It doesn't look like we have any more questions. And if I skipped any questions, please leave a comment under the video and I'll come back and answer them. But as always, guys, I hope you guys enjoy the rest of your evening. For my people watching this live, for my replays, if it's morning, enjoy the rest of your day. If it's the daytime, enjoy the rest of your evening. But thank you guys for joining me, and I'll catch you next time, which will be most likely next Sunday. Love you all. Have a good night.